Hello, friends. Hello, my dear family. Very good afternoon. So, we are moving now into the next section, which will be very helpful in our trading journey, which is called as indicators. Okay, so this will be the uh, agenda for today for this topic. So we'll see what are indicators and why indicators are helpful in taking our trading decisions, and we'll go about the first topic as well, which is exponential moving average, simple moving average, and their difference. Okay, so without wasting time, let us get into the topic. Okay, so what are indicators? Okay, so indicators, as the name suggests, they are used to indicate something. Basically, if you are taking a trade, okay, so I'll show you the definition as well. Okay, just give me here, give me a minute. So if you just So basically, there are a lot of indicators. We'll see one by one. Okay. So these indicators, they are actually used to, take a trading decision. Say, for example, if you have known our previous support and resistance videos, if you have seen them, or if you have seen a breakout kind of a video which I have posted earlier. Okay, so all these things, breakout or trend following, or how was a trend? Basically, we calculate it based on higher highs and higher lows, and if it's a downtrend, we calculate it on lower highs and lower lows. But these indicators, they add extra confirmation to filter whether we can actually take a trade or we can avoid that. Okay, so if you see, they are basically some mathematical calculations. Okay, they can be based on the price or the volume or the open interest. Open interest, we'll cover it in a later topic, just ignore that for now. Okay, so what will happen, based on these mathematical calculations, they will be plotted in the chart which we are seeing. Okay, I'll give you an example. Okay, so before that, uh, so say for example, if I go to this chart, okay, I'll just open this chart in a separate window. Okay, so if you, I'll just remove all these, everything. Okay, so if you can see here, okay, if you can see, you can very well see that this is on a 15 minutes time frame. If I change to a day time frame, okay, you can clearly see, right? So here there is a support line, right? ITC has clearly broken the support line here, where here this area ITC has clearly broken the support line, and it is going in a downtrend, right? But right here, if you see, I'll just show you an example. Here, if you see, ITC has taken resistance multiple times in this area. You can see, right? The price tried to break, but eventually it fell down. It is at this area, right? So it is in this area. 1, 2, 3. So 3 times it has taken resistance and it has fallen down, right? Now I'll just clear the drawings. Okay, so the same thing, if you consider this as resistance, right? But see here, now the price has broken this level, right? And it has started to go in an uptrend. So normally by price action, we can figure this out, how the price is moving, right? If you can see now the price is, this is a low, high, higher low, and then higher high, higher low, and then higher high, right? So ITC was in an uptrend in this specific time frame, correct? But just with this, we will not be able to take a confirmation. Basically, indicators are used to indicate, they are used to add a secondary level of confirmation. Okay, so we have now seen what are indicators, right? And what are the use of indicators? Basically, they add confirmation to our trading strategy, whether or not we can go ahead and take that trade. Okay, so the first thing, okay, the very first indicator, which will very, I mean, much of the traders will be using, is a moving average indicator. Okay, so this moving average is only this is an exponential moving average, right? This is the first type, and second is a simple moving average. So exponential moving average is EMA, simple moving average, shortly they call as SMA. Okay, so how is this calculated? Okay, let me tell you with an example. Okay, okay, so assume the price is going like this. Okay, so I'm just taking a different color. So assuming that this is a day chart. Okay, so this is the first day of closing this. Okay, this is the second day, this is the third day, this is the fourth day, this is the fifth day, sixth day. Okay, and here it has closed up to seventh day. Okay, so now what will happen? So the close price, if you have not seen that video, please go ahead and watch it. So the close price of 1 2 3 4 5 6 and 7, okay, the average of all these closing prices will be plotted as a line on the chart, which is the simple moving average. Okay, there are few other parameters here, I'll tell you, but okay, then you might get another doubt, what is the exponential moving average? Okay, so exponential moving average is also the same thing, only difference being there will be a weight associated with each thing. Say for example, if 7th is the most recent candle, right? If we can see, so for 7th, might be they might assign a 30% weight. Okay, or rather I would say, and so this they might assign 28% weight, like that, on and on it goes, like 5 4 3 2 1. So because of this weightage of 30 28, the moving average line, it should somewhere be like this in a simple moving average, but because of the weightage it may change something like this. That is the only difference between a simple and an exponential moving average. Okay, so there is one more parameter here which I will show. Okay, so how to add these indicators on the chart? So if you can see, I'm using Zerodha's chart. Okay, basically the how to add the indicators, everything is the same across all brokers. There might be only a little bit of difference, but more or less the process is the same. Okay, so you can see I don't have any indicators now, so there are indicators you can see here, right? There are FX indicators here. I click on this. Okay, then I type moving average. You can see this, I am just favoriting this, I'm just clicking this moving average one. So you can see a blue color line, just in case you are not able to see this. Okay, so you always, your indicators will appear, whatever indicator you add, normal indicators, these will appear in this area. You can see buy and sell, right? Below that all these indicators will appear. So whenever you take your mouse over that, you'll find a settings icon. If you click that, you can see this. I'll come to this length parameter. This is the close which I told, right? You can change to high of every day. So it's a day candle, so high of every day. Based on the high value of every day, the moving average will be calculated. If you choose low, it will be calculated based on the low of every day. Okay, so I'm creating for the close of the candle. I'll come to this length in a minute. Okay, if I go to the style, the plot is here. If that plot is whether you want to turn on the moving average or turn off. Okay, if I click on this, I can select whatever color I want. So for example, for now I'm choosing this purple color. You can see this thickness, right? Just observe the chart also. If I click on the thickness will be accordingly increased. So just for visibility, I am choosing the second point now. Okay, I'm clicking on OK. Now you can see a purple line which I showed as in the paint, right? There is a purple line which is going here. Now coming to this, actually this MA number after MA indicates the length which is here. Okay, so this length actually denotes based on how many number of candles. You remember in paint we saw 7 days, right? 1 2 3 4 5 6 7, right? We saw for 7 days. So here if I come back to this chart, so here it is 9, which means that from today, for the past 9 candles, this will calculate. This will keep on going 9 candles before, and it will calculate the average and it will plot it as a graph. So suppose I click on 7 here. Okay. Just observe this line carefully, guys. If I click on OK, you can see here this has changed, right? Suppose I click on 20, which means that the average recursively average will be calculated for every 20 candles. Look at the moving average line when I am clicking OK. You can see the difference, right? So, and MA, this number also has changed to 20. Okay, so now I will show you, this is how you can add a moving average. So for comparison, in the same chart, I will show you how to add the exponential moving average. So I click on indicators. So I type EMA. You can see moving average exponential. Okay, I click on this. Okay, same thing. This is EMA is in 9 setting. So same, I am just changing to 20. Okay, I'm choosing a different color, say red, or might be we can choose some dark or okay, we'll go with pink. Okay, I'm choosing the third thickness level. Okay, and so guys, can you see the purple is the simple moving average, and because of the weightage, that formula and all you don't need to know, guys. Just for now, just remember that the only difference between a simple moving average and an exponential moving average is because of the weightage that is added to the number of candles. Okay, so you can see this point, right? I'll show you specifically here. So both are the same setting. 20 length is meaning the past 20 candles, it calculates the average, and it goes on in the left and it calculates and plots this graph. So you can see simple moving average purple line is below, but because of the weight, the exponential moving average line, which is the pink one, it is a little bit above, so it is not the same. So now for your easy understanding, what I will do, I will go to the same thing, but guys, same thing. If you go to this setting, you can find 2 more options. You can click on hide, so that line will be hidden, and you can click on remove also, so it will be removed. For now, for you to show the difference, I am hiding the simple moving average, which is MA20. You can see the difference now, right? Now I am turning it on. Can you see the difference? So this is what is the difference between moving average and exponential moving average. Now, coming to this, let me add one more point. So basically, what is this used for? This is used for trend identification. Okay, so I hope you went through that trend video. If you have not gone through, please go through. Assuming that you have gone through, I'm going ahead with this one. Okay, so I'm just hiding this. Okay, just for you to have a better understanding, I'm changing it to a weekly time frame. Right, so now only exponential moving average is enabled. I have hidden the simple moving average. So now, can you see here? Let me just draw a box. So from this point onwards, right? Yeah, from this point, all the entire candle is above the simple moving average, correct? So whenever actually simple moving average is simply used to, guys, this is not just a confirmation, right? Indicators are only used to validate our trading ideas. Based on indicators, you it is up to you to take a trade or not, but I would suggest not to, because we need multiple confirmations, which I will, as time goes by, I'll tell you. But for now, just understand that if the candles are above the exponential moving average, then the price is in an uptrend. Okay, how do I tell uptrend? If I start here, okay, this is low, okay, this is high, higher low, higher high, higher low, higher high, higher low, right? So this is how I tell that. This is just one of the ways. In case if you're not sure of how to check a trend, you can go ahead and look at this. Let me go ahead and check with another stock. Okay, just close this for now. Let me go with HDFC Bank. Okay, guys, again, all the stocks shown here, they are not a recommendation to buy or sell. It's just for an example. Okay, I'm just randomly, just for you to get an understanding, I'm just changing the time frame just to show you an example. Okay, guys, see here. So you can see here the price has crossed below the simple moving average, right? And from here, all the candles until this point, okay, all the candles are below the exponential moving average. So exponential moving average line, which is the pink one, is on top. Candles are below that. So this particular boxed area, this is in a downtrend. And same, if I can go a little bit here also, I can show you this exponential moving average is on top. Right from this point onwards up to here, all the candles are below the exponential moving average. So this is in a downtrend. So indicators are actually just an additional means of validating is not a confirmation. Okay, so I can also show you hiding this exponential moving average. Not much difference, but basically the only difference is because of the weightage that is added to each of the candles based on the length. Suppose now moving average is enabled. Let me just change it to moving average 50, guys. Okay, just see when I click on OK. Can you see now? So if you average for more number of candles, you can capture longer trends. Okay, say for example, I'll show you for 100. See this area, I'm just marking. This trend started here and up to it ended here, right? So just watch this boxed area, guys. I'm doing it in simple moving average. Suppose I am reducing, I'm just doing this for a 200, right? So the point which was here, now this point is ending somewhere here, right? They started here. Okay, the box is not working, but I'm just showing you the area. Okay, this is the area. So earlier, which was something around here on an EMA moving average, simple moving average 100. Now because of 200, it is ending somewhere here. Okay, and just see this, guys. Just hold a minute. Just marking this. So this started somewhere here, right? And it went down all the way up to here. So now let me just come reduce this value to 50. You can see now earlier where it used to cut here, right? The trend now, because of the shorter period of moving average, this ended here itself. So depending on the length of the moving average or the exponential moving average, you can capture a short trend or a long trend. A short trend meaning like you can use it for a swing trading or for an investing purpose. Okay guys, so that is what. Let me give you one more example. Okay, let me go with Reliance. Let me first show you the difference. Let me go with 1 hour candle. Okay, 1 hour time frame. So I'll use this tool. So this starting here, right? And this is ending here. So from this flow, from this point up to this point, you are getting a 7.92% of returns, right? Now let me go with moving average 100, simple moving average 100. Now can you see where this has crossed it again? So this is now ending somewhere at this point. So here, which is a 7.92% returns here. Now if I just select the same thing and if I drag it all the way here, now can you see guys, now the return is from 7.92, it has gone to 11.88 because of the reason we are using a higher moving average. Now let me go still more further. Guys, just remember it is 11.88 with a moving average 100, right? From 11.88, now can you see where this has actually exited downwards somewhere around this point, correct? So if I now again select this, so somewhere around, so from 11.88 it has now come to 12.48. So guys, depending on whether it is it can be an EMA or a simple moving average, the difference hardly does not matter. If you are doing an intraday trading, then exponential moving average is the best for you. Or if you are doing for a swing trading, you can use either simple moving average or exponential moving average. But point here is, as and when you increase the time period of the moving average, you can capture longer profits, right? As long as the trend is in your favor. So this is what I just wanted to cover with indicators thing. So we'll go with the next section or next indicator in the next upcoming video, guys. If you have any doubts, please feel free to ask me. Thank you, guys.